Very good morning. I'm Malcolm Graham Wood and I'm at Core Finance doing my CEO interview. Today's guest is Andrew Knott, CEO of Savannah Petroleum. Welcome again, Andrew. It's so nice to see you. You've got some great news to tell us and I'd love to talk through what you've just recently been announcing. Just to begin with a very quick overview. We've seen you recently, so a little overview of Savannah Petroleum, please.
No problem. Good morning, Malky. Okay, so Savannah Petroleum, we're an AIM-listed oil and gas company. We've got a very good, strong and loyal investor base, primarily institutional. We have the businesses which are pretty straightforward in two separate countries. In Nigeria, we've just finished the acquisition of two producing oil and gas fields, and a midstream infrastructure business. And in Niger, we have an exploration, appraisal and development business, where the headline numbers is it costs about $1 a barrel to find oil in country. The value we believe is up to $6 a barrel, and there's a clear path to monetization. But really, I think the focus of what we've been talking about in the last week is more around the performance of the Nigerian business we've just acquired. And yeah,
Excellent.
Happy to go through that.
So you published CPR on the Nigerian assets yesterday, alongside a wider operational update on trading and operations. So I'd really like to go into that in a bit more detail. Maybe we'll start off with what's happened as a result of the completion of the Seven Energy acquisition.
Yeah, no problem.
Thanks.
Okay, so in terms of there was really two aspects to yesterday's update. The first was there was a competent persons report published, which really reiterated the quality and the potential of the assets we've acquired. So the key things in the competent persons report update was an expectation of average of sort of minimum case $130 million of free cash flow per annum for the forecast period at the asset level, and then a valuation of the assets we've acquired at $957 million, so just shy of $1 billion. So that was really the two key highlights there. I think it serves just to reiterate the potential of the assets. Separately, there was a trading update, and really the trading update shows like it's not about jam tomorrow, it's about jam today. So over $190 million of cash collections expected this year, significant debt pay down expected this year, and also a significant cash balance expected to be within the assets at the end of the year. So really very, I think it should be seen as a very robust update, because certainly within the company that's what we view it to be. Separately, we also announced we've managed to reduce production costs by about 18%. I should say that's in an absolute sense as well. That's not even on a BOE basis. And the last thing we were talking about was that we're actively seeking to invest for growth. So the free cash flow numbers that are in the CPR assume quite a significant investment program in order for us to be able to grow the production for the new gas contracts that we've been talking about, which even of themselves we expect to be NAV and cash flow enhancing over the course of 2020.
So, I mean, there are so many big things in there. We won't go through them individually, but I love the high cash flow generation of the assets. I love the fact that the assets are being proved almost immediately after you finish the deal to be of the highest quality. You said the word robust. I noticed that you said that production was up 33% this year. I mean, if you combine production being up 33% and your costs coming out of the business, that makes the profitability and again the cash flow. I think you mentioned somewhere that you've got a strong platform for growth, which really does show through in these numbers. So, I think that's obviously excellent. You mentioned the customer base and so on. It might be worth just saying, because I've underlined several times, and obviously I wrote something yesterday in relation to new contracts, potential new customers, and additional gas supply. So this is important in terms of how it's going to come through to the bottom line for the company. Why don't you talk me through just how you see that happening?
When we did the Seven deal, the core attractions were around we had high quality assets, significantly underutilized infrastructure, and a very good set of people associated with the business that, with the right financial, operating, corporate culture would enable us to really grow what we have. So the pipeline infrastructure that we've acquired is very significantly underutilised. The central production facility that we acquired is very significantly underutilised. And the main thing that's required to get them up and running is to sign new additional gas sales agreements on top of the ones that we've previously announced. So key projects that we've mentioned are we expect to add gas sales to a new power station in the new year called Algae, which is capable of very significant offtake. We've guided that we expect to be able to sign up additional new gas sales agreements to a combination of governmental power stations and private sector customers, and they will be at varying pricing points and different types of contractual structure. But there's been a lot of that sort of preparation work has been done, and we're now hopefully in the period where we can just announce that. Clearly, when the business was in a period prior to our acquisition, the uncertainty around that prevented them from being able to sign these new contracts. But now that we've got clear leadership, clear ownership, that enables us to go and roll that out. The other thing is that not only do I think we can significantly grow our revenue base over the course of the coming months and years, I also believe that we should be able to reduce our cost base, particularly on the refinancing side, and there will be a big program that we'll have in the business next year to refinance out the debt at a lower cost and hopefully a higher tenor. And both of them will significantly serve, we expect, to increase the equity value of the business. And I should say as well, we're very fortunate to have such a good private equity partner that we do in that business, being Africa Infrastructure Investment Managers. Very, very experienced, very, very good private equity outfit, over 40 and plus investments in the subcontinent, multiple investments in multiple different infrastructure related industries in Nigeria. And also, I would like the people that we have in the business, they're the right people to do what we need to get it done. I was going to
ask you that, because we've talked about this a number of times. I've always said that I thought, you had a management team and a group of people on the ground where you've got so much chance of increasing the business in the area, and because almost all your people are used to running bigger firms, and so they'll be able to do that as the company grows. But I couldn't help noticing you announced this morning or yesterday that Anton Richard has joined you, or rejoined you, should I say? Maybe a word or two about him, because it's a very interesting appointment for you.
Antoine's rejoined the business. He will be based in Lagos going forward. Very experienced guy. He, as you know, the legacy Savannah, everything we've done is coming on time, on budget. He was involved in the majority of those historic programs. He left to take a COO role at a different business, and he's now coming back on and really it's very exciting, because the experience he's had, he has managed as country manager and operations head much bigger projects, much more complicated projects, etc., etc. So the fact that he's come back to Savannah, we're very, very happy about. But it's not just about the very senior, the sort of the C-suite executives. I don't like picking out individual people, but examples of other people that we have that have done fantastic jobs. We have a very successful go-getting lady who runs our CSR team and our stakeholder relations, called Nkoyo Etuk. That's an award-winning CSR program that we have, and it serves to say why we don't have production outages, etc., etc. And we make a real positive contribution to the community that we're in. On the financing side, we have a lady called Funmi Ogamakin who runs our finance team in Nigeria, who has been really very instrumental in putting together the new debt facility that we have, and will be instrumental there. And for example, in the commercial team, we have a guy called Ogie Peters, who again is really forcing through, alongside his colleagues, the whole agenda of getting these new gas contracts in place. So we've got a real deep bench of talent, and it's just a case of just of going out there and executing. The strategy that we have in place is now super, super clear.
Because the message that we're getting from last week's announcement, and then yesterday's announcement in particular, is that as you go forward and you look at next year and the year after, you've got a very strong platform for growth here. As I mentioned, supplying gas to new customers, increasing the supply. You've got the increase in production that we said. You said in your statement that you'd expect to see production going up even in the first half of next year. You mentioned the LNG power station there with more customers. and I think you've got $40 million of cash, capex in next year to develop the AccuGas facilities. So, this isn't hanging around. This is moving very quickly to what you call is to generate significant value for shareholders, which really is the case, isn't it?
Yeah, and what we've always said is that we want to grow, and we see a lot of opportunity. We see opportunities within the assets that we have. I think it's worthwhile spending a small amount of time on Niger because there's a lot of growth in 2020 going to come through in Niger, in my view. But we have the existing assets which we think we can grow, but we have a team of people and a demonstrable capability in country now, which I think will lead to a whole lot of other opportunities.
Yeah.
I also want to say it's always difficult singling out individuals. There's many other good individuals within Nigeria and the Niger team that I didn't mention, but I just picked out 3 examples. We've got a whole bench of people.
And Niger was going to be my next question, because obviously this has been put on the back burner since the 7 deal has been completed. But I presume it means you're going to target the MD1 testing after all this time, and then putting an early production facility on. Is that the plan for Niger? Or?
I'm laughing a little bit because I think it might have gone back on the back burner in terms of what some external stakeholders have focused on. But for us, it's a core business, and we see the same value creation potential in the Niger business as we have in the Nigeria business. But in terms of what we've said about Niger is, firstly, we intend to provide quite a detailed update in Q1 in terms of what the plans are, but I'm sure it doesn't take a genius to work out what that will be.
Yeah.
We intend to introduce a partner, we intend to start the early production system, and we intend to go back to exploration drilling. We've got we've previously said, we've got 146 structures that are worth considering drilling. The focus will be to go up that southwest flank, because that's where we've got the best definition on those structures, and also from an infrastructure and logistics perspective, it just makes the most sense. That would be for those that are more familiar with it, so we'd be moving from R3 East to R3 Central, then into R1 South, and then what we've always said is, from an explorationist perspective, there's some very big structures that sit on the Dinka Ridge, which is just to the north of the R2 block, which could potentially be very, very big, but they've got a different risk profile that at some point we want to get around drilling, but that's probably a 2021 event.
Excellent. That pretty much wraps it up. There's one thing I wanted to ask before I'm not going to ask you the usual question of where do you expect to see the company, because we can gather that from what you've been saying. I've been a bit concerned that the share price has been staying at the low level. I know lots of people say it about lots of companies. I've got a target price of 75p for your shares. They haven't moved very much. I know it's a difficult question, but I know you don't mind being asked. Are you worried about the fact that the shares haven't rallied very much, and that somebody might come and have a go at you? Or?
So look, you're talking to someone who's put money into virtually every capital raise and a lot of their own money. So there's a lot of alignment with the board and shareholders on this sort of issue. I mean, clearly, when you generate cash, and for example, the best thing I can tell you, I guess the clear thing is, sort of 3 Fridays ago, we sold 20% of the business to private equity at a value, 20% of 2 of our 4 main assets. So our 4 main assets being AccuGas and Ukwo, which we sold stakes in, Stub Creek, which we didn't sell a stake in, and Niger, which we didn't sell a stake in, for a price that on a standalone basis is a significant premium to where the shares trade today. So clearly, I think that demonstrated the value, and clearly the cash that we're now talking about, etc., it is something that is obviously there in the back of our mind. There's definitely a market for cash flow assets that are simple, like we've got like now in Nigeria. But that said, we're very value focused as a company and a management team. We are extremely confident in the growth and the robustness of the assets that we have, and that is our core focus. That doesn't mean we would not do the right thing if we were so approached, but we're so far away from where there's a realistic conversation
like me,
about the right thing.
The right price is a lot higher than this.
Correct.
And Andrew, thank you very much for coming in, answering the difficult questions, as well as running through what you've been up to lately, and look forward to seeing you again Today's Core Finance CEO interview has been with Andrew Knott, the CEO of Savannah Petroleum. Look forward to seeing you again soon, and thanks for watching. Bye now.